All right, so I'm gonna go live so that people can start coming in.
Okay.
Welcome, everyone. We will be getting started in just about a minute and a half.
Hey, John, glad to see you're back for more punishment. So John Weaver is probably on every one of these webinars. So thanks for your loyalty and support, John. So Corey says, thank you so much for making me a profitable trader. Wow, that's phenomenal. Thanks, Corey. I'm glad I could be of some help. So I'll give this another minute and then we'll start. Caden Glass, glad you could make it. All right, we have 140 participants and counting. I'll give this another 30 seconds and then we can start. Hey, Natalia. Natalia is also a loyal supporter. So a lot of you, I see a lot of familiar names. Always nice to see you. So we have north of 150 people. So I'm just going to go and get started. So welcome to this live 4-day trade execution webinar series. It is live. It is in real time. I'm always asked, that question. Now, the markets have closed, but this is a live presentation on how to capitalize on monster moves in the markets and also avoid the market traps. My name is Mark Shawson, the Pattern Trader. So I want to thank you guys for showing up. There's over 160 people on this and then much more on the live YouTube channel. So welcome, everybody. What I'm going to try and accomplish over the next few days that we spend together is share with you how I analyze the markets exclusively based on price action. And so this is in contrast to what we call fundamental analysis. So in fundamental analysis, for instance, if you're looking at a company, you'd look at a price earnings ratio, you'd look like an inventory ratio, you'd look at the management and all kinds of metrics, what are called fundamentals. So I make buy and sell decisions exclusively just on what the market is telling me, the actual market movements. And I'm going to share with you over the next couple of days how I try and line up a high quality, high value trade. This is about a 4 or 5 step process where I look at the trend, I look at the pattern, I look at an individual price bar, and then I confirm it all with a buy stop if I want to buy it or a sell stop. So I always require the market to confirm what I'm looking at on the charts. And so I'm going to go through a couple of charts in real time. This is not theory, we're not looking back at some textbook and sharing how something looks and how it, went. I'm actually going to go in real time. This happens to be a very formidable time in the markets. We have all of the mega cap tech stocks going to announce their earnings this week. So Google, Microsoft, Visa, I think are tomorrow. I think you've got Apple on Wednesday, you got Amazon. And so you've got all of the four big market movers going to announce their earnings. And usually those earnings, send the markets, are catalysts to, make sizable moves in the market. So before I kind of get into that, just, for those of you who don't know me, just by way of introduction, I've been trading for many decades now. I started off in college, when my dad was looking for an investment banker for a drive-through animal park called Lion Country Safari. He met this interesting guy named Graham Loving, who was an investment banker. And, Graham would frequently come over for dinners. And on the side, Graham was also actively trading the commodity futures markets. Now, this was more decades ago than I care to acknowledge, but this was in the late 1970s, where you have a lot of conditions that you're seeing now, where you have this virulent kind of inflation. This was the first time that gold went to over $1,000, silver was over $50, pork bellies and soybeans and everything was running. And Graham was trading about 20 different markets at the same time: live hogs, cocoa, orange juice, T-bond futures, you name it. And I was just overwhelmed by how he could keep track of all these things. How could he understand all of these things? And then I learned that kind of understanding was really the antithesis to what he was trying to do, or really to making an evaluation on an investment. I try not to understand what I'm looking at. To me, the price is a discounting mechanism. The price is the news. The price is ahead of the news. And so just the evaluation of price is the only thing that I look at. So, for my early learnings of, Graham Loving as my mentor, I went on to work at, very sizable investment banking firms, E.F. Hutton, Shearson Lehman, Drexel Burnham. A lot of these companies don't even exist anymore. Merrill Lynch, Oppenheimer and Company, the Bridgewater, which is a huge hedge fund. And I was managing money for, high net worth individuals, myself, small corporations. And I spent many decades looking at the markets and hopefully being able to share what I've learned with you. That's really why I started the Pattern Trader. I started Pattern Trader in, I think it was September of 2016. It's almost been 6 years now. And it was really an effort to kind of share what I'd learned, kind of how to capitalize on these moves, but also kind of how to avoid the traps that the markets inevitably set. And so over the next couple of days, I hope to share with you. So this is just really an educational forum where I'm trying to show or share with you this methodology. Now, inevitably, I'm going to be looking at a chart, and then you're going to ask me to look at thousands of other charts. And that's really not what this is about. I'm going to show you how I evaluate an opportunity based on an individual setup. And, we can go through thousands of charts, but this is, not going to be the time to do that. So I'm just going to go through a couple of things. First off, I'm going to share with you, I'm long these call options. I bought them today, Bank of America call options, the 37.5 call options that expire at the end of the week. A call option is a very leveraged bet. In this case, on the bet on the upside of Bank of America. I'm also short the stock of Tesla. I got short at about 1,040, and now it's about $1,000, and I'm short that stock. And then in another account, I'm also long these Bank of America calls, and then I'm long Morgan Stanley calls. So you can, today I really kind of just got a position on with the intention that I think they're going to explode over the next couple of days, but my position's already up 32% for the day. Even though I got it on pretty late in the day. So I'll take a look at those charts, share with you why I bought them. And then I have some FX positions. I'm long dollar yen, and I got short gold last night, shared with my members to get short gold. And, we'll take a look at that. But before I kind of get into those positions, I'll just share with you, how I look at a setup and then what is possible. So this is the dollar yen. This is what the format of my emails on our elite program looks like. If you're interested in this daily program where I send out my trades every single day, at the end of this webinar series, you'll get a note from our team alerting you how to sign up for the elite. This is not going to be a sales presentation. I'm not going to try and pitch you on anything. I'm going to share with you how I look at the information. If you think it's valuable and you think you can, add it, to your arsenal, then, let us know how we can help you. So I'm just going to share with you. This is kind of what the format of my email, where I show you on the chart what I'm looking at. So you can see there was a sizable breakout here in the dollar yen, a long-term breakout. This is a weekly chart. So this chart, happened over many years, and you can see it started breaking out right here, and then it broke out again. I told our members to buy this at 117, and last week it went to 126. So it went up 900 pips. And that's the other thing. I'm not looking to take out 7 or 10 pips out of a market. I'm looking for 150, 300, 500 pips out of a move. And, I went on to explain dollar yen is broken out of a long-term symmetrical triangle, and, it's broken out. And then I also advised our members to get long the euro yen at 132 based on the same view that the yen pairs were weakening. And I made over 350 grand on those pops of the dollar yen and the euro yen. This was a trade in the pound New Zealand dollar. I advised our members to buy it at 192.77. Also buy it again at 199.61. Blew out for a sizable profit in pound New Zealand dollar. This was a trade in QuantumScape, a short recommendation. And, I was just, blowing it out, making a lot of money getting short QuantumScape. This was a trade in the stock Lyft, LYFT, for the buy recommendation at 45.83 based on a double bottom. I advised our members I'm personally long the stock of Lyft and also these call options. This was a while ago, but again, it doesn't really matter. I'm just trying to show you cause and effect, that if you can analyze these setups, this is what is possible. So, this is a very complex broker statement, but it just shows you that I started buying the stock, 5,000 shares at $45.68. And I blew that out at $58 and made $90,000 in the stock. Then I was buying these $96 call options at $46, in these $46 call options for 92 cents. And I blew them out for $7, which is like, I don't know, an 800% return or something like that in like 3 or 4 days. And then I bought the $47 call options at $1.10. I blew them out at $6. And so this is, what I do. If I like something, I'll make a very leveraged bet. This was a leveraged bet on JD, the stock JD, where I bought the call options at 126 and I blew them out for 425. So that's a 400% profit in a couple of days. This was another account where I bought JD at $1.15 and $1.21 and blew them out between 360 and 375. Now, maybe this is not a good idea to share with you all of these leverage bets. It's just another way to, take advantage of big moves. This was a put option I bought in the NASDAQ. I bought these things at $1, and 2 days later, I got out of them between, $6 and $8 and made about 600% in 2 days. So same thing in Beyond Meat. I bought this stock at 120. Also bought the options at about $1.55, and they went to $23. So I made over 7 figures in this particular trade last year. So this is just kind of give you a flavor for the setup. Now I mentioned a couple of trades that I did today. The market has been, the stock market at least, has been all over the place, very volatile. Mainly kind of the NASDAQ and fits and starts going lower. But to me, trades are all about risk and reward. And so this is the chart of the NASDAQ or the ETF, the triple Qs. And you can see that the NASDAQ, had a little bit of a bounce today, made a low, closed at the high because we're right in the support area. So you can see that there's just a lot of noise where it's bouncing up and down in this area. And so trading is, very all over the place, very hard to hold a position for very long. So I look to just sneak in at certain areas where I can understand risk and reward. And I think there's a good risk reward in the bank stocks right now. Like I shared with you, I bought the call options of Morgan Stanley and Bank of America. And so what I'm seeing on Morgan Stanley and Bank of America, and maybe this is, pretty early stage, but, and it's hard to kind of explain sometimes the nuance of, certain things, but this is a weekly chart of Morgan Stanley. And, it's pretty much in an uptrend. The trend is higher, and you can see how we basically got back to the support area. And, I think that this is going to grab a foothold. I bought some call options, which is a very leveraged bet, which means that, I need this stock to go up, very quickly this week because my options expire at the end of the week. And so what I see in Morgan Stanley is this kind of reverse triangle, which in and of itself is not a, it's just something to observe. So sometimes when, prices go all over the place, I put certain boundaries around them and then observe how they trade within a boundary. So what I'm seeing is that there's a potential triple bottom down here, and there's, support at the lower end of this reverse triangle. Now, again, this is a very nuanced, subject, but what I look at is what a market is doing as well as what it's not doing. So you can see that in the week prior, we had this sizable reversal. So this was last week's trading action. This is a weekly chart, which means each one of these bars represents 1 week in time. And so last week, we made a new high and then closed at the very low of the week. And so, if this was really bearish, I would expect that, we would close on the low and then, we would start going lower. But you can see that this thing started lower and now it's going back through the previous unchanged, the previous week's close. Now, again, I can't really explain all of this in a short thing, but when something kind of starts lower and then starts going the other way, it usually keeps going. And so collectively, there are a lot of things which to me just suggest that this is a very good risk reward trade. So this is a crazy market where there's so much noise and so much things going on, where I try and reduce the noise and find little areas where I can understand risk and reward. And if you can understand your risk, then the reward will take care of itself. And to me, that's what trading is all about, is understanding where to get into a trade where your risk is relatively small for a very acceptable outcome. And even if I'm wrong, I'm not going to put myself in a position to lose a lot. So again, here we see this is a daily chart now where each one of these price bars represents one daily session. Now, what you'll notice about the charts that I look at is that these are what are called clean or naked charts. And why is it called a naked chart? Is because you notice there are no indicators here. There's no volume. There's no moving averages. There's no Bollinger Bands. There's, no MACD. There's no indicators. There's just price and time. And what I try and do is look at a picture, and from that picture, determine what the future trajectory of that instrument is. Now, again, this is probably not a great example of that. This is pretty early stage, pretty speculative. I think I can take a shot here and see what happens. But again, you see this reverse triangle here. And what I'm looking at is how this closes. So sometimes the way something closes, makes a new low, closes on the high, in this area where you can see there's a bit of a, triple bottom forming here. And again, this is maybe not the greatest example. I have an instinct and I just feel like I could take a shot. I bought these call options pretty close to the close, and actually they started increasing after I bought them, and I've got a little bit of profit in them. And so if they just go up a little bit tomorrow, I could double my money overnight and then, get out. So I'm looking just for an explosion out of here. And if it doesn't come, again, my risk is not that far away. So if you buy the stock here at 85 and risk to 82, that means you can take a $3 risk for something that could go substantially higher. And this is what I try and do on an ongoing basis, is try and find little pockets where I can find these low risk trades for high reward. Bank of America, in the same space, I think, again, looks like, in a bearish market. And I do think that we are in a market that is substantially, under pressure. This is a spot I think you can kind of hang out. So here again, you can see how interestingly the markets hew to these trend lines. You can see how many times this thing has touched this, and now touched it today. And when it did touch it, you can see we have what I call a key reversal, where it made a new low, but by the end of the day, it closed at the high of the day, meaning the buyers were in control. Now that's in and of itself, doesn't really mean a lot, but again, I think I can camp out here and check it out. And I don't think it's going to take out that low, which is just a few dollars away. And so I bought these options, a little bit, now they gain more premium. And so, if they start picking up, I'll make a lot of money on those options very quickly. So this is kind of in a funky thing where you've got this descending triangle. And so I think prices will at least levitate back to the high end of this triangle around the $39 area, and we're trading at 37. And the thing is, I'm trading these options that, are a very leveraged bet. If it just does this, I could make 2 or 3 times, my investment very, very quickly. And if it comes through here, it could be a catalyst, for a bigger move. So again, this is kind of picking a bottom, and maybe not the best example of, what I'm looking at for a trade. It's just that the markets are in, a very difficult cycle. And, just to step back and share with you, there are so many kind of themes and sub-themes that, going on in the market. I really struggle for kind of how to put it together in a simple way. But, this is the prism which, I've been viewing the tech sector for quite some time. So, we've had the NASDAQ going down quite a lot, and the S&P and the Dow Jones have been hanging out pretty close to the high. So it's been a market of stocks, not a stock market. And so, the leading sector has been this tech sector. The tech sector has led the market up. And now you can see this is the tech sector. This is an ETF that comprises Microsoft and Intuit and Salesforce and a number of technology and software stocks. But you can see that the tech sector has come up from 460 to 300. So I'm not great at math, but that's like a 30% retreat when the S&P and the Dow Jones are just a few percent from their all-time highs. And so the tech sector has been leading us, led us higher, but it's also been leading us lower. And it could be a preview of coming attractions of what is going to happen in other markets, because tech makes up 20% of the S&P and half of the NASDAQ. So you can see that this week we kind of started, we sold off in the last couple of weeks. And, today we just started, with a bang with, the market kind of coming back from last week's losses. And again, this was a very logical place. You can see that, the market grabs a foothold, at certain areas, and this is just a logical support area. But this is, again, if you remember what I said at the top, I try and point out how to look at the big opportunities, but how to also avoid the traps. Now, this looks like, it's a buying opportunity, but I think within the larger global context, this is just, a bounce that won't last. And eventually we're going to go and make new lows. Now, why do I say that? I say that because I look at markets through the prism of, whether, is a market trending or, and you can see that from 2019, this was just a huge uptrend in the market and technology based on, central bank stimulus. But like everything else, trends do end. And when they end, they end with a chart pattern that tells us that a trend has ended. And the chart pattern that I'm sharing with you is what I call a head and shoulders. Now, right at the outset in your chat box, you should see a link to a strategy booklet. It's a free booklet. I invite you to download it. And in there, it has a half a dozen patterns that I look at all the time. Now, there's many more, but armed with just these few patterns, you can understand, a lot of what's going on in the market. And so what a head and shoulders looks like, it looks like just like a man or woman's, this would be the left shoulder. The peak is the head, and this is the right shoulder. So when you stand back, it looks something like this. We have looks like a head and shoulders of a person. And this is a bear formation. This indicates a reversal. Let me just kind of put this back up. So what a reversal pattern means is that leading up to the pattern, the market was going higher. Now, if this is by definition a reversal pattern, it means once this pattern is confirmed, that market will be thrown into reverse. When it crosses what we call the neckline is simply the line that is drawn throughout the entirety of this pattern. And once it breaks that, it effectively confirms that this pattern is complete. And now we're by and large going to see a stair step lower. And that's basically what we've seen in this IGV, which is, again, a proxy for technology stocks. So when you look at this head and shoulders, you kind of see this almost downward sloping. You have this drooping neckline, which implies actually it's even more bearish. And so this is really the pattern that I look at. This is what I call the governing or dictating pattern, because this is going to govern or dictate price behavior. Now, that's not to say there's a whole bunch of times where prices, are going to go the other way. And as I tell my members, short covering rallies sometimes are more extreme than the down moves itself. But, again, these are just selling opportunities. So I believe that if this goes higher, it's just going to be another selling opportunity. Now, this actually dovetails with another very bearish price pattern. So we see the head and shoulders right here. But if we kind of draw a support line there where you see all of these major lows connected, and then you draw a line where you connect all of the highs, you stand back and you see what's called an ascending broadening price pattern. So throughout that pattern, prices are going up. They start out narrow in the pattern and then widen or broaden at the top. And so this is a bear price pattern. This is another reversal price pattern. And you can see that both of these patterns, the head and shoulders and the ascending broadening price pattern, both broke down right around the same level, around the 370 area. And so once this support was broken down, even though it was retested a couple of times, it told us that now this thing was going to go lower. Now, this is like having, next month's or 3 months newspaper, telling us where the prices will go, because once an ascending broadening price pattern has been violated, then it's very likely that prices are going to retreat right back to the origin of that triangle, which means that prices should go back to about this 270 price level. We're trading at about 311. So that means we've got at least whatever, 10 or 15% left to go lower. And I think it's likely we could go even further lower, but again, this gives us some kind of way to understand how the market's moving. And even though we get these counter moves, you know, you shouldn't get seduced into them. Now, sometimes these counter moves, you know, I will trade them, understanding that this is what I call a counter trend move. Now, I don't want to throw too much at you guys, but what I'm just trying to share with you is that I look at everything. So we can talk about the Fed. Is inflation increasing? Is Fed, you know, inflation decreasing? Is Fed tightening gonna, cause a recession? We can talk about a million things, but this is really all I look at to make buying and selling decisions in the market. And, you could see, certain times you get into this stage where it's a little bit, difficult to put on positions with the expectation that they're just going to translate to bigger moves. So this is a very choppy kind of area where your support, you have resistance, and, you're just banging here. But again, I would not, things will look like it's bottoming, but I just feel like the larger pattern tells you where this is going to go. So the patterns equal trajectory. We can look at all kinds of things where, I told our members to short Facebook and Netflix and all of these stocks. In fact, I'll show you, I was kind of digging in around and I was trying to find, certain emails that I sent, a while ago. Let's see. So this was like in Beyond Meat. Anybody who knows me has known since Beyond Meat peaked out at $218. I said this was going to be a $30 stock last February. So, I was telling people to buy it at, sell it at $130, and now this stock's in the 30s. And I was saying, Beyond Meat's formed a Head and Shoulders. I said, penetration below this reversal bar will very likely send, prices careening lower. I'm short the stock, and I've been, short Beyond Meat forever. I've been short Zoom and QuantumScape. And so all of these decisions were based on major, I said, when was this? Last June, almost a year ago, I said the Japanese yen is on the cusp of a major paradigm shift, where the yen has been strong forever, and now we're in this weakening thing. And we've just seen the Japanese yen's on the cusp of a major paradigm shift and appear headed much higher over time. Now, this was almost a year ago. And if we look at the Japanese yen from a year ago, I started telling our members to buy it right there at 110, and now we're at 128. So these patterns inform us to trajectory. In fact, while I'm here, let me just share with you what I was looking at. And again, I don't know what the federal, the central bank's going to do. I don't have any inside information. All I look at is price information. And when we look at the movements of the Japanese yen, and this is a weekly chart, and this pattern occurred over 5 years. So this is actually a symmetrical triangle here. So you can see that I was shorting the Japanese yen for years, every time it hit the upper edge of this resistance line, because it formed lower highs. Every time it made a new high, it was lower than the last high. And then right here, it started breaking, making higher highs. And, started alerting our members to this breakout. You can see how this price action was just sitting above this long-term trend line. And so, I was alerting our members to a major paradigm shift where the market was going to go from one direction to another. And these charts alert us to this opportunity. And I've literally made hundreds of thousands of dollars on the recognition simply of this chart pattern. I talked about Beyond Meat. Sorry, I'm kind of bouncing all over the place, but I'm just trying to give you a global view, how armed with just an understanding of price action, how you can understand direction of markets. It doesn't matter if, you don't have to be, an econ major from MIT. You don't have to understand Fed policy. In fact, understanding all of that thing is contrary to being an effective trader. So this is the chart of Beyond Meat. And here was, again, that head and shoulders price pattern that we talked about here, where it broke down there. And then here again was a double top, where simply you have two tops in the same area. And so you have this M pattern. This is another reversal price pattern. Now this M top was coupled with also a head and shoulders, where this whole thing was the head, this was the left shoulder, this was the right shoulder. And again, it looks like a man or woman's head and shoulder. And then the neckline was right through here. So you can see this 113 price level. Once it violated that, I was saying right here when it was $218 that this was going to be a $30 stock. And here we are. And so again, I just didn't understand anything about the company, its financials, its strategy. I don't care. Price told me everything I needed to know. In fact, every week this company would come out with some announcement on how it did some major strategic alliance with Kentucky Fried Chicken or McDonald's, or did a lunch program in Canada, or was doing something in Ireland. It was always releasing something that looked like good news, but price was telling you all the way down that doesn't matter what the company was saying, that the market was telling us where. So this is just a great example on how patterns equal trajectory. So by understanding the pattern right up here, and once I understood that I could see the price action up there, I was saying that this is going to go much lower. And you can go and look at my YouTube since last February. I've been saying this to our members forever. Every week I'm shorting this stock. And so to my mind, this was just a gigantic pattern right there. And then it just took a little time for it to roll over, and then pattern equals trajectory. So I bounced around quite a bit. Maybe I should just stop and take some questions. So let me just kind of back out, and I'm sure there's tons of questions. How do you know that price is going to break the trend line? So, son, I basically, trend lines are somewhat arbitrary, although you can see that in the case of Beyond Meat, sometimes the market does, hug these trend lines pretty reasonably. You can see that this long downtrend line, every time it's bounced to that thing, it's bounced lower. But to me, what I look at is the pattern. I guess they call me, that's why I call this business the pattern trader, because these patterns equal trajectory. When you see a pattern, once the pattern is staked out, then, pattern equals trajectory. And you can see that every time this thing, hit this upper end of this thing, it then just bounced lower. So I'm not sure what you mean by trend lines. Trend lines are somewhat arbitrary. I look at the pattern, and then once I understand the pattern, then the pattern tells me what the likely trajectory is going to be. Now, it's not going to be in a straight direction. There's going to be, a lot of chucking and jiving depending on, I showed you the stock market right now. It's bouncing in these huge ranges, but I think it's going to go lower. You know, and I think, you know, last week was pretty definitive in the, you know, the S&P. Well, you can see there's just, yeah, it's just a washing machine. But, you know, last week we had a giant sell-off and we're right in the support area. But I think, you know, the S&P also looks like it's in this ascending, broadening price pattern. We're right on the support area. So, you know, sometimes you can grab a foothold here and then, you know, prices can. So what I do is I draw a pattern and then I see how prices respond within the pattern. You know, do prices grab a foothold here and, you know, or, you know, do they violate it and then, you know, go lower? So, I'll give you guys a link to the book in a couple of days. So there's a lot of discussion about my book. I'll give you a link to my book in a day or two. Jean says, do you always play with a clean chart? No, I never use indicators. Whatever you see here, what I look for is, you know, this is exactly what I do, is that I draw a boundary around prices, and then I see how prices play within that boundary. And what I notice here is that there's a bunch of what I call key reversals, where it makes a new low, it closes on the high, makes a new low, close on the high. And if it makes a new low and close on the high this week, you know, sometimes those reversals tell me, you know, in connection with, you know, the support level, how this thing is likely, you know, going to play or so either this thing is going to bounce and respect this thing, or it's going to break this thing and go lower. And if it goes lower, this is just like the IGV. I think it's going to come back to this area, which means there's still a huge move lower. And I think it's pretty reasonable that we could have that. But, you know, if the market goes the other way, I'm not going to, you know, second guess it. I'm just going to go where the market tells me to go. But I don't use any indicators. Whatever you see here is exactly what I look at. I showed you Beyond Meat. Let me show you another email I sent out quite a while ago. That's the yen. Sorry. This was, okay, so this was in Zoom. So again, this was about a year ago, June 2021, where Zoom stock was over $300. And actually 3 months prior to that, when it was in the 400s, I was telling our members, you can see this double top here, that, you know, I was shorting Zoom all the way down. So this was an email from a year ago where, again, I was sharing the stock. I was telling our members to short it at 318. And I said, over the past 6 months, Zoom has formed almost every bear price pattern possible. Recently, Zoom formed an interim head and shoulders. Penetration below today's low neckline will very likely send prices lower. And then I said, this stock has nowhere to go but lower. So that was a year ago in Zoom when stock was 320 bucks, and now it's at 100 bucks. So again, I'm looking at nothing but what you're seeing here to make those predictions. So, you know, this was somewhere, I don't know where it was, but, you know, if we now look at Zoom, and it's easy. I mean, this is what you see in the textbooks, and now it looks simple. You can see what happened. But I was telling our members for probably the last year and a half to short Zoom all the way up from the top. And, you know, again, what I'm looking at is nothing but price action. So here you see the head and shoulders, then you see a double top, then you see another double top and the head and shoulders. And so just all the way down. And then this whole thing was a descending triangle. And so this whole thing was what we call a distribution pattern. So these series of bear price patterns were telling me that all this was just selling. And once the selling was over, just, you know, put into motion what we see here. So this is all I look at to make those decisions. So I was telling our members to sell this at 320 bucks. And I said that this stock has nowhere to go but lower. And that was a year ago. And there's what happened. And all I was looking at is this picture. Nothing more complicated. No volume, no Bollinger Bands or expert moving averages or what you want in MACD, or there's nothing on this chart but time and price. And to me, picture tells 1,000 words. And if you understand patterns, that told you that that was a top. And if something's a top, it's going to go nowhere but lower. And chart after chart after chart. I told our members 2 weeks ago to sell Netflix before the earnings. When Netflix was 300 bucks, now it's 200. So pattern equals trajectory. So this was Netflix, big institutional stock, a darling. It was 700 bucks a few months ago. Now it's 200. Here was an asymmetrical double top. You can see one peak is lower than the next, but it's still a double top. It's still, if you look back, this is an M top. And, you don't want to look at it that closely. This whole thing was a peak, and this was the big shoulder. This was the lower shoulder, but you can see the right shoulder sitting below the left, and, it has this huge descending thing. And I said back here, based on this head and shoulders right there before earnings, I said you have to sell into earnings. And you can see it went from 350 bucks to $200. Now, how did I know what earnings were going to be? I didn't know. But if you look at the price action, the price told you what was likely to occur. Now, going into this week, we have a raft of earnings. Tomorrow we have Microsoft, which is also sitting on a very important trend line. Now, the question is, does it hold this trend line or does it start breaking it? So this is going to be a very, very pivotal week for the market. So you can see that Microsoft has been hugging, and it could be argued that you broke through slightly last week, and now you kind of pivoted above here. So the question is, tomorrow after the bell, whether Microsoft's going to continue bouncing off this line, or if this is a very pivotal price breakdown. And I don't know, it's tough to tell. I mean, these bars right here tell you that there's a lot of support in this thing. It's kind of a crapshoot in here, but so what I look at is, how does a market respond, within a given context? So here you can make an argument that we have a double top and a head and shoulders. So my thinking is the earnings should be the catalyst to send this thing lower. But what I look at, you see these, these patterns in a textbook, and in the textbook, it goes down like this, but, life is very different. So what I look at is I look at how does the market respond to a given, level or what have you. Does it hold here, or does this start giving in? And, I just feel like this market is vulnerable to go the other way. So I don't know. It'd be a very dicey thing, but I'm guessing that I want to see how we close tomorrow before the earnings tomorrow night. So tomorrow it'll be after. So again, if I look at Microsoft, let me just peel out of here a little bit. So this is the daily chart of Microsoft. So, when you look at a chart, you have to determine what is the governing price pattern. What is the pattern that is going to dictate the next direction of prices? And so you could look at this and say, well, this looks like, major bottom where every time it bounces here. But to my mind, if something bounces off an area so many times, very unlikely that that area is going to hold. Just intuitively, if a market's going to bottom, you should see, I've seen a double bottom, I've seen even a triple bottom, but then it should go. If it's good, the market shouldn't give you 17 opportunities to get in. And so, we had a bit of a what I call a dead cat bounce today. I don't think this is going to sustain. And that I'm thinking that after earnings, we're going to get that. So we'll see Wednesday whether that's the case, because I think that this looks more like the governing pattern. This looks like a triple top or a rectangle pattern. And this looks like a top. This whole thing looks like, it could be a head and shoulders. And so what I do is I draw this pattern, and then I see, does the market respect that pattern? Does the market go in sync with what I'm seeing? Or if it fights it, then it's what we call a busted pattern, where it basically invalidates that pattern. So it's a bit of a nuance. I don't want to throw too much stuff, but this is a very formidable area, this 270. If we break it now, we're likely to go a lot lower. And I think we're going to break it. So we'll see. Also, tomorrow is Google. After the close tomorrow, Google recently broke a trend line. And, we had a bit of a bounce today. And the question is, where do things go from here? So this is going to answer a lot of questions this week. Google, is a complicated. Yeah, this one's a little bit more complicated. I wouldn't want to. You could, this is in a major uptrend. You can see, just like these bank stocks, you've kind of hit a low, and it's going to be very important how we kind of close tomorrow and what have you. So, Google could just go back in the chop here. This one, I'm not so sure about. And then Visa also up tomorrow. And if I'm not sure, then I don't do anything. Visa, you can see it's neither here nor there. It's hard to make out. Can't tell one way or another. So what I try and do is find charts where, that it's not ambiguous. You can see Visa's in this trading range, and that, that the chart is setting up for a move in one direction or another. Min says, how do we know when to analyze the daily and when to analyze the weekly? So this is a weekly chart. So if I'm confused, if something's, let's say I'm looking at this thing and I really can't make heads or tails on the weekly, I'll actually go look at the monthly. So the idea is to understand what is the global view. I'm trying to figure out how, to take advantage of the next, maybe not a mega move, but a move, that goes for, for $15 to $20, or, could be the next, $50. I'm trying to take a piece out of the middle of broad moves. And in order to do that, you need to understand, certain time frames. What I'm not looking at is a 15-minute chart, because that just becomes a gamble. So it really comes down to, my objective is to make at least 3 times my risk. And that's a very important concept. I'm going to come back to that tomorrow and talk about risk and reward, because I think that's the problem with most short-term traders, is that they're trading on such small time frames, and your objectives are so small that it's kind of impossible for you to be a winner in the market. If you're trading FX and you're trying to take 5 pips out of the market, or 7 or 15 or 18, and you got to risk, 10 pips to make that 18, and you're doing that 5 times a day, it's just a war of attrition. You can't win that game. So what I try and do is I wait for a yen trade, and, this could take, years. But when you do, this thing went on, I made, 800 pips on this trade. Straight up. So this is what I'm looking for, is to take a piece out of the middle of these bigger trades. And, in order to do that, you need to look at a daily or weekly or monthly to understand, whatever gives you the broader understanding for what's happening on that chart and what's likely going to be the next move. So I'm always looking for that next wave, that next move. I shorted gold yesterday, where I told our, so this was my email yesterday to our members. And so here was the gold chart, and I'll share with you what I looked at, and then we'll wrap it up there. And I said, just put a sell stop at $1,919. Today closed about $25 lower. And, I said, this week's key reversal at or near a long-term double top indicates a possible lower trajectory. So this was the gold chart I was looking at. And again, it's amazing how a lot of these charts form the same pattern. So for the last year or so, I've been looking at gold through the prism of this ascending, broadening price pattern. Before I do that, maybe I can try and find where I make this gold trade. I just want to put in perspective. So this was a trade January 10th, 2021. And you can see gold was midway between this ascending, broadening price pattern. But by understanding the patterns, I kind of understood what was going on before it actually happened. And so I said, gold is forming an ascending, broadening triangle. My target objective is $1,700, and that's when it was trading at $1,900. Now, why was it $1,700? Because that was where the lower end of this support line came in. So even though, markets are trading over here, by understanding patterns, you can understand certain objectives. That's why I think that the IGV is going to 270, because this would be the same, kind of translation. So I advised our members to sell at 1,867. I had a follow-up order to sell at 1,797, and that was the outcome on those trades. I got out at 1,687, just under 1,700. So it hit exactly my target objective. So that was about right here last year, where I started shorting it there, and my target objective was there. And again, to me, I was looking at gold through the prism of this ascending, broadening price pattern. And you can see how it's been kind of hugging the lower end, but now it looks like it wants to revisit it and go that way. So I was always very skeptical of this up move. I think, we're eventually going to come back and collapse. So now price is starting to, so what I do is I draw my chart, and then if this kept going, I would have gotten in sync with that and bought it and, gone. I just want to surrender to the will of the market, wherever the market wants to take me. Now, this one's been tough because you can see, by and large, it's just been a large chop machine. And I want to stay out of those. I want to wait until something resolves itself so I can understand what the next direction is. So, once this thing starts taking off here, I will take a piece out of the middle of this. And now I think that, we're going the other way. So now we hit this double top or potential. It's too early. It's kind of speculative, but that's the way I look at it. This is just a formidable resistance level, and we haven't been able to take it out. And then last week, we have what I call a key reversal. Remember, this is a weekly chart. Each one of these bars represents 1 week in time, so that we made a new high and closed on the low. So these reversals within the context of the resistance and many other things that I'm looking at start telling me a story. Now, even if I suspect something, then I require the market to confirm. So this is why in my email yesterday, I said, put your sell stop right under last week's low. So, if this week the market opened and, went higher, I wouldn't have been triggered. But what happened was, you can see that incrementally prices started a little higher earlier and then collapsed and now automatically put me into this trade. So to my mind, trading should be effortless. The market should just put you in, in the direction that you're looking. And so now, I'm in this trade and, I'm looking for, this thing to maybe come down and retest this area, and then it could play around here. But if we start coming through this, it will start telling me that you're breaching this and heading for lower trajectory. But what these reversals tell me is that, first off, it tells me where to join the trade and where my risk is. So, where something's going to go, how far, what time frame, this is all the unknown. Is that going to happen? How far? When? I don't know. But if I can get in here and understand my risk is there, and say, okay, I'm willing to risk this for that. I may not be right every time, but all I have to do is be right a few times, and that's how you make big money in the market. And so I look at these things through this has taken years and years to develop this pattern. And so if we break it, it will put you into a formidable trade. Now, if it comes here and bounces and wants to go back up, I will follow, so I just, I don't make up where this thing wants to go. I look at how it's dancing between these gravitational forces and try and just get in sync with that move. Kareem says, woohoo, nice sell on XAU. So Corey says, I used to trade on 1 minute or 5 minute. Is that just gambling? It's just gambling. Where something goes in the next 5 minutes is arbitrary. I'm looking at a weekly chart since 2019. So I have 3 years of history here. With a minute chart, you've got, whatever, the last 2 days. So it's just gambling. I'm looking at a global picture to put me in position for a big move. So I'm not getting chopped up in all this stuff. I'm not just trying to day trade on a, in and out 10 times a day, because you will just get chopped up. So Soren says, how do you pick up the options to short? So whether I buy a call, which is a bet on the long side, or a put, which is it's entirely based on the underlying instrument. So my bet on Morgan Stanley and Bank of America, I bought calls on that because the underlying instrument looks like it could move. And so, I don't look at the parameters of the options. I look at the actual instrument itself. And then you've got to size up, is it going to move? And then is it going to move right now? Because options, you've got a very short fuse. I've got till the end of this week for those things to work out. And frankly, I could be out tomorrow morning. If this thing opens $1 or $2 higher, I could make, 150% of my money, and I could be gone. So I'm just looking for explosions. With options, I'm just looking for those explosions. Sorry, I'm just looking at some of these content. John says, do you believe all gaps get filled? I wouldn't trade based on gaps. It could take forever to get filled, even if you're right. So I've never found that particularly useful. Thanks, John. Do you look at VIX to work out what's happening? Sometimes I do look at a lot of things. It wouldn't really determine, VIX is like an oversold. If VIX gets to 35, 38, I start getting out of my shorts. So maybe I'll look at it, Do you trade on the news? One word, no. How do you feel about it? I only trade on price action. Whatever you're seeing here, there's 1,000 things buffeting gold. Fed policy, interest rates, there's a war in Ukraine, there's supply shortages. You know, I don't find that very useful. I try and make risk and reward calculations, meaning if I get in here, what do I have to risk to make that? That's all I'm looking at, is trying to look at an instrument, I don't care what it is, and then dialing it down to a risk reward calculation. I'm not trying to sit here and be Janet Yellen and figure out Fed policy and the impact on, you know, my instrument. Because yeah, you could say, well, 3 months from now, be based on this and this, but it does you no good right now. Raymond says, I love a clean chart. I've learned so much in the last hour. Perfect. How do you find take profit levels? Zoran says, again, that's a function of what you're looking at. So the longer something takes, the more mature it is. If this thing breaks, you know, and it's formed this giant distribution top, the more work it's done, the more likely, or the bigger move that is likely. So realistically, the take profit on this thing is $1,100, $1,200 on gold. Sounds crazy. It's at 1,900 now, but come back to me in 18 months and, you know, we'll see how that, you know, or it could bounce here and go to 2,500. So it's going to do one or the other. And all I'm looking to do is get in sync with, you know, and take a piece out of these moves. So take profit is really a function of each trade and where you're at in the chart, what's going on. Do you use RSI? So Soren, there's no indicators, no RSI, no MACD, no volume. I don't know how many times I could say it. I don't trade the news. I don't trade indicators. This is exactly what I look at. I look at price and time. I look at a trend. So this has been in an uptrend. But you can see that, you know, for the last year or so, it's kind of stalled. It's just not going anywhere. The trend can't sustain itself. So now this trend could be reversing. And when it does, it'll come through this pattern. And that's how we'll know that now this thing is ready to turn. So, you know, you have trends and then you have patterns that indicate that perhaps the trend is ending. So all I look at is this. I don't look at anything else. Charles said, do you mean we can only do day trading? So I'm just trying to take pieces out of the middle. Now, this has been kind of a short-term environment where, you know, every 3 days it changes from one to the other. So I'm just looking for these quick bursts because sometimes you have to trade based on the environment. So, you know, I'm saying, you know, I trade based on price and time, but I think that there's also a third element here. It's called environment. Sometimes the environment, you know, you just get this through, you get this velocity of trading where it just keeps going in the same direction. And then in other environments, you get this chop. So you have to be cognizant of the environment you're in. So, you know, I think stocks are going to go lower, but, you know, we're at the lower end of the support level. And so you just get this banging around. You know, every time you hit this lower end, you start, you know, getting a little bit of a bump and grind. So it's, you know, I think this could continue for a while. You know, we've been spoiled with directional trading in stocks where it's been pretty much going up or going down, but there, you know, are a whole bunch of times where, you know, markets just get in these trading zones. So it's very possible that you could just bang here for 3 months or 6 months. It's very possible. So, how far is your stop loss? It depends on every trade, Chris. Kareem says, finding a good risk ratio, that's a religion or something that sounds philosophical, but that's really what it comes down to. My best trades are where I understood that I almost had no risk, where sometimes the risk sometimes the market just de-risks. It gets into a point where there is no risk. Now, I remember being on a webinar like this once, and I said it, and as I said it, I realized it was a very reckless thing to say, but I really believed it. You know, I was trading this stock called QuantumScape, and I think it was somewhere in here. This was a while ago. And it was somewhere in here. Well, I said there's literally no risk in this stock in being short, you know, and that was when the stock was at 45 bucks and it went straight to like 22. And I made a lot of money. This doesn't look like a lot, but you know, I just felt like I didn't even have $1 worth of risk. This was QS, and there were just a whole bunch of bear patterns. I mean, this thing was over before it began. This thing was a funky double top. And this whole thing was, you know, I just shorted this whole thing all the way down. And so there are certain times where the markets get, I'm trying to, well, this was a long time ago. They get so mature that they literally de-risk themselves, where if it goes through a certain bump and grind for a certain amount of time, like right here, this is basically where it was. I was on a webinar like this, and so to me, this whole thing, you know, was a descending wedge. And like I said about Microsoft, you know, the more times you hit a low, the more likely it is you're going to go through that low. You don't just hit the low so many times. Yeah, you can keep bouncing and what have you, but eventually you'll go through it. And with Microsoft, you may not go through it this week, but you know, I don't think it's particularly useful. So once I saw this behavior and I saw this top here and I saw this top here and I saw this top here, there are certain times where literally you could short it here and understand you have no risk. This is where, you know, the market just starts de-risking itself. We have like $1 worth of risk to make 20. And literally, I just made a fortune of money on this thing and I just loaded up. And so there are certain times where, you know, the market does what I call a key reversal, makes a new high, close on the low. And it doesn't look like much, but this thing went from 40 to like 27, which is a huge move. If you certainly, I loaded up on that. But so you can see that this thing, you know, chucked and jived for enough time, and the more time it bangs, you know, it just starts de-risking itself. Like the more mature it gets, like at some point, there's almost no risk in that thing. And so the idea of the stop loss and take profit, it's a different discussion. Depending on what you're looking for, where you are in the chart, and what the objectives are, and you know what that chart looks like. So it's a very difficult, discussion to have. Joseph says, "Can I use the daily and weekly to get entry on lower time frame?" See, I always get this question. It's like every time I say you got to use the daily and wait till the close, people say, well, yeah, but I want to trade more. I want to trade, 10 times a day. And the problem with that is, Joseph, it's not that you can't. So you can look at these things and then drill it down to, but what happens is that invites a much more short-term time, mentality. Then what's happened is you're trading more. And then, you get into a thing where the market just puts you into a washing machine. Every day it's up, down, and sideways. And so when you're looking at it on a short-term chart and you really can't see what's happening, you can't see the forest for the trees. So, right here, you're buying when it goes up and then you get out. And then you're chasing it, and then you're, buying it down there, and then you're chasing it. And so I'm sure you've all been there where it just, the market just turns you inside out. Because, there's certain times where it just goes very choppy. And if you're not looking at this on a bigger time frame, and you can't really understand that this is just in a big downtrend, then you're just going to get chewed up over time. So this is a very difficult game. And the idea is to be objective and, see the big picture, because, sometimes when you get into these kind of cycles, and this is what I avoid. So what I want to do is I want to take a piece out of the, the middle. So once I kind of understand a pattern, then I just want to take a piece out of this. Once I understand this top, then I just want to take a piece out of here. Here's another top. I want to take a piece out of the middle. So once I can understand a pattern and then there's going to be a move, then I want to just take a piece out of the move. But when the market starts going like this, then I just move to something else. I want to be in a market that's, moving up or down. Once it's kind of going quiet or sideways, then you can, look at your hourly charts and knock yourself out trying to, trade it for a couple bucks here or there. But I think it's a war of attrition. And the only one who's going to win that game is your broker. All right, so I'm going to start wrapping it up. We have 4 days together. So I just wanted to kind of give you kind of an appetizer to looking at the markets just based on objective price information, standing back, not letting all the noise, not looking, on TV, not, sitting on forums, not talking to your friend, so the idea is to find objective areas where you can set up, risk and reward. So we'll see tomorrow. I made some bets on these banking stocks, and we'll see tomorrow, if they follow through. But to my mind, whether they do or they don't, doesn't really matter. I have such a small risk. So this is Morgan Stanley. I bought this thing before the close, and then I bought Bank of America, and not mind-blowing kind of things, but to my mind, I can understand where there's a risk reward that I can accept. So this is at 37 bucks. I think I have a $2 risk to make $6. That's a 3-to-1 risk reward ratio. And if you can make a 3-to-1 risk reward ratio in all of your trades, you can actually lose 72% of your trades. So everybody thinks, well, I need to win 80, 90%. It is if you're taking out these micro moves in the market, but that's just a game of attrition. So I put a strategy, I'll put it again, a PDF. Take a look at it before tomorrow. Take a look at the patterns. They're all kind of scientifically verified. So what it says is that once a pattern has been formed, and you can see this was a pattern that formed in Bank of America, is that usually you get a move for 100 days beyond that. So here was a double top, which told you that this thing was going to move lower. So you could have sold it at 44. It went to 36, which is a big move for a bank stock, on a price basis. And so pattern equals trajectory. And now, I'm kind of surmising that maybe we're at the bottom of this pattern. This is probably not the greatest example of what I do and what I look for, but I just feel like on a risk reward basis, I feel pretty good about it. Sometimes you just feel things in your gut. And we'll see tomorrow. So I actually bought a bunch of call options in this thing, and if it just goes up a couple bucks, I can make a good amount of money. So we'll see what happens. Thanks, John, as usual. Corey says, thanks for your time and wisdom. You're welcome. So thanks, everybody. I'll see you tomorrow, 4:30 Eastern Standard Time. Dwight, thanks a lot for your time.
All right, no problem, Mark.
Thanks, buddy.